On February 25, 2025, Microsoft made headlines by announcing its withdrawal from the $100 million Stargate Initiative, a collaborative project with OpenAI, Oracle, and SoftBank aimed at building a significant AI infrastructure in the United States. This decision was attributed to what Microsoft characterized as inflated demand projections for AI capabilities, leading to concerns over potential oversupply and the subsequent cancellation of several major data center leases. Overview of the Stargate Initiative. The Stargate Initiative was unveiled by President Donald Trump on January 21, 2025, during an event that highlighted the joint venture's ambition to invest up to $500 billion in AI infrastructure over the next 4 years. The initiative was designed to bolster the United States' position in the rapidly evolving AI sector, with contributions expected from key players including OpenAI, Oracle, and SoftBank. Key developments following Microsoft's withdrawal. 1. End of exclusive partnership with OpenAI. Microsoft, which had been the primary cloud provider for OpenAI since a $1 billion investment in 2019, lost its status as OpenAI's exclusive cloud partner. Instead, Microsoft will now have a right of first refusal for any additional computing capacity OpenAI may require. This shift indicates a significant change in their relationship dynamics and suggests a strategic realignment as OpenAI explores other funding and infrastructure sources. 2. SoftBank's increasing role. In light of Microsoft's withdrawal, OpenAI has reportedly strengthened its financial ties with SoftBank. The Japanese tech giant is expected to invest up to $30 billion in OpenAI, potentially covering a substantial portion of the computing needs for the Stargate project. This pivot reflects OpenAI's strategy to diversify its funding sources and lessen its reliance on Microsoft. 3. Oracle's infrastructure initiatives. Despite Microsoft stepping back, Oracle has commenced construction on data centers in Texas for the Stargate project. These facilities are crucial for supporting the anticipated demand for AI services and will play a significant role in the project's future, although questions remain regarding the project's overall viability without Microsoft's involvement. Analysis of demand projections. Both Microsoft and industry analysts raised concerns about the overestimation of demand for AI capabilities. This sentiment points to a potential recalibration of expectations within the tech industry regarding AI infrastructure needs. The cancellation of Microsoft's data center leases suggests a strategic response to perceived market conditions, indicating that the anticipated demand for AI services may not materialize as initially forecasted. Evolving partnership dynamics. The change in Microsoft's status as OpenAI's exclusive cloud provider signifies a broader trend of tech companies diversifying their partnerships amid increasing competition in the AI landscape. The evolving relationship between OpenAI and Microsoft may reflect the need for both companies to adapt to changing market dynamics and investor expectations. Timeline of significant events. 2019, Microsoft invests $1 billion in OpenAI, establishing itself as the primary cloud provider. January 21, 2025, President Trump announces the Stargate project with financial commitments from Microsoft, Oracle, and SoftBank. February 25, 2025, Microsoft announces its withdrawal from the Stargate Initiative and the change in its partnership status with OpenAI. February 22, 2025, reports surface regarding OpenAI's increased financial ties with SoftBank, indicating a strategic shift in funding. Financial implications and future outlook. Despite the withdrawal, Microsoft is expected to continue its relationship with OpenAI, particularly in the short term. OpenAI is projected to increase its spending on Microsoft's services from $13 billion in 2025 to $28 billion by 2028. However, the long-term trajectory suggests that as SoftBank's investments materialize, OpenAI's dependency on Microsoft may gradually decline. OpenAI's revenue projections are also promising, with estimates suggesting growth from $3.7 billion in 2024 to over $12.5 billion in 2025 and potentially reaching $28 billion by 2026. This growth is attributed to an expanding user base, with OpenAI recently surpassing 400 million weekly active users on its ChatGPT platform. Conclusion: Microsoft's withdrawal from the Stargate Initiative and the transformation of its relationship with OpenAI mark a significant pivot in the AI landscape. As OpenAI seeks to diversify its funding sources and reduce its reliance on Microsoft, the dynamics of AI infrastructure development are likely to evolve. With SoftBank emerging as a key player in this arena, the implications of these changes could resonate throughout the tech industry, influencing future AI investments and partnerships. The shift also indicates a broader recognition within the tech sector of the need to recalibrate expectations concerning AI demand and infrastructure development. The decision by Microsoft to withdraw from the $100 million Stargate Initiative, which it co-launched with OpenAI, Oracle, and SoftBank, marks a pivotal moment in the landscape of artificial intelligence and computing infrastructure. This move, rooted in Microsoft's concerns over inflated demand projections for AI capabilities, has significant implications for the future of AI investments, partnership dynamics, and the competitive landscape in technology. Counterintuitive information. 1. Inflated demand projections. It is somewhat surprising that Microsoft, a company with vast resources and expertise in technology, would cite inflated demand projections as a reason to withdraw from a major AI initiative. This suggests that even major players can misjudge market needs, highlighting the unpredictability of tech trends. In an industry known for rapid growth, a sudden pullback indicates a more cautious approach than expected. 2. Shifting partnership dynamics. Microsoft's change in status from OpenAI's exclusive cloud provider to merely having a right of first refusal is counterintuitive. Considering the company's significant previous investments and strategic alignment with OpenAI, this shift challenges the typical narrative of tech giants solidifying their power through exclusive partnerships. It illustrates that even established relationships can become tenuous in the face of shifting market expectations and competition. 3. Emerging role of SoftBank. The fact that OpenAI is increasing its financial ties with SoftBank while reducing reliance on Microsoft is noteworthy. Typically, one would expect a major player like Microsoft to maintain dominance in such partnerships, especially after substantial investments. However, this shift suggests a strategic diversification by OpenAI, indicating that reliance on a single partner may not be sustainable or beneficial in the long term. For infrastructure oversupply, Microsoft's decision to cancel major data center leases due to perceived oversupply in AI infrastructure is a strikingly contrarian stance. In an environment where demand for AI services is generally seen as surging, the idea that there could be too much infrastructure being built is counterintuitive. This raises questions about the sustainability of the current AI boom and reflects a more nuanced understanding of market dynamics. 5. Continued investment despite withdrawal. Despite withdrawing from the Stargate Initiative, Microsoft is still expected to increase its spending on OpenAI's Azure services significantly. This indicates that while Microsoft may be stepping back from certain commitments, it remains heavily invested in the AI space, challenging the notion that withdrawal means a reduction in overall involvement. 6. Revenue projections for OpenAI. The projected rapid revenue growth for OpenAI, from $3.7 billion in 2024 to potential revenues exceeding $28 billion by 2026, contrasts with Microsoft's rationale for withdrawal. This divergence points to a broader trend where some forecasts may be overly optimistic, yet they coexist with cautionary decisions from industry leaders like Microsoft, creating a paradox in investment confidence versus operational strategy. 7. The role of Oracle. Oracle's proactive stance in constructing data centers for the Stargate project, even as Microsoft withdraws, is counterintuitive. Traditionally, Oracle has been seen as a secondary player in cloud computing compared to Microsoft and Amazon. This sudden pivot to take up the mantle of infrastructure provider suggests a deeper competitive strategy that may not have been anticipated. 8. Implications of SoftBank's investment. SoftBank's potential investment of up to $30 billion into OpenAI, significantly bolstering its infrastructure capabilities, highlights a shift in the funding landscape. The expectation that SoftBank could cover 3/4 of OpenAI's computing needs by 2030 is counter to the common belief that established tech giants would dominate such funding arrangements. 9. Long-term versus short-term strategies. The narrative suggests a tension between short-term financial commitments and long-term strategic positioning. While Microsoft is scaling back, it is simultaneously positioning itself for future growth through its existing agreements with OpenAI. This reflects a nuanced understanding of market dynamics that isn't purely transactional but rather strategic in nature. 10. AI boom versus tech industry realities. The overarching theme of the AI boom being tempered by realities such as overestimations of demand and oversupply in infrastructure challenges the popular narrative of unbounded growth in the tech sector. It underscores the need for a more grounded approach to forecasting and investment in technology. In conclusion, Microsoft's withdrawal from the Stargate Initiative alongside the changing dynamics with OpenAI and the emergence of SoftBank illustrates a complex landscape where traditional narratives of tech dominance and growth are being re-evaluated. The counterintuitive aspects of this situation reflect broader uncertainties and evolving strategies in the rapidly shifting world of artificial intelligence. The withdrawal of Microsoft from the $100 million OpenAI Stargate Initiative is a pivotal moment in the AI landscape, highlighting several overlooked aspects that carry significant implications for the tech industry. 1. Inflated demand projections. Microsoft's cited reason for its withdrawal, inflated demand projections for AI capabilities, signals a critical reassessment of the market's expectations for AI growth. This decision indicates a potential oversupply in AI infrastructure, prompting a need for recalibrating investments and strategic planning. Many analysts and industry watchers may underestimate the long-term impact of this recalibration. Significance. This could signal a broader trend where companies might be overextending themselves based on optimistic projections. If firms like Microsoft are adjusting their strategies, it may lead to more conservative approaches across the industry, affecting innovation, hiring, and investment in new technologies. The cautionary tale here may serve as a wake-up call for other tech companies that might be pursuing aggressive, potentially unsustainable growth trajectories. 2. Evolving partnership dynamics. The shift in Microsoft's partnership status with OpenAI, from exclusive cloud provider to having only a right of first refusal, represents a significant change in the competitive dynamics of the AI sector. This change is often overlooked as a mere business adjustment, but it reflects deeper issues related to trust, collaboration, and market positioning. Significance. The evolution of this relationship may indicate broader strategic shifts in the tech industry, as companies like OpenAI seek to diversify their partnerships and funding sources. It suggests a growing trend of companies not wanting to be overly reliant on a single partner. This diversification strategy could lead to increased competition, innovation, and possibly fragmentation in the AI infrastructure market as companies race to establish themselves as independent players. 3. SoftBank's emergence as a key player. SoftBank's increasing financial ties with OpenAI, potentially investing up to $30 billion in covering a significant portion of the Stargate project's computing needs, is a crucial development that may not receive adequate attention. As OpenAI shifts its reliance from Microsoft to SoftBank, it underscores a significant financial pivot in the AI landscape. Significance. SoftBank's entrance as a major player could redefine the funding landscape for AI projects. It raises questions about the influence of investment firms in shaping the direction of technology companies. As SoftBank steps in with substantial backing, it may alter the competitive dynamics in the market, leading to new innovations and potentially reshaping the relationship between technology and finance. 4. Infrastructure development and viability. Oracle's commitment to constructing data centers in Texas for the Stargate project is a vital aspect that may be overshadowed by the focus on Microsoft's withdrawal. The viability of the Stargate project itself depends on this infrastructure development, which is crucial for supporting AI services. Significance: the construction of data centers represents a tangible investment in AI infrastructure, which is essential for meeting the growing demands for AI services. However, Microsoft's withdrawal raises questions about the project's future viability and the potential for an oversupply of infrastructure. If demand does not meet expectations, these investments could lead to underutilized resources, impacting the financial health of the companies involved and the broader market. 5. Impact on AI market projections. The overall implications of these shifts in partnerships and funding sources may lead to altered projections for the AI market. Analysts often focus on growth numbers but might overlook the underlying factors that could affect these projections, such as shifting partnerships and potential market corrections. Significance: as companies adjust their strategies in response to market realities, the AI market's growth trajectories may need re-evaluation. Investors and stakeholders should be cautious about overly optimistic projections and consider the long-term sustainability of these growth patterns. This could influence investment decisions and strategic planning across the tech sector. 6. Long-term implications for Microsoft. While Microsoft remains a key player in AI, its withdrawal from a significant project and the shift in its relationship with OpenAI may have long-lasting repercussions. The company's strategy and market positioning could be affected as it navigates a landscape where it is no longer the exclusive provider for OpenAI. Significance: this may force Microsoft to rethink its competitive strategies and explore other avenues for growth and innovation. As AI becomes more democratized and accessible, Microsoft will need to maintain its relevance in a landscape where other companies are stepping up as viable partners and competitors. Conclusion: the withdrawal of Microsoft from the Stargate Initiative is not merely a business decision, it is indicative of broader trends and significant shifts within the AI landscape. The overlooked aspects, such as the implications of inflated demand projections, evolving partnership dynamics, and the emergence of SoftBank as a key player, carry profound significance for the future of AI infrastructure and investment. Understanding these nuances will be essential for stakeholders looking to navigate the evolving tech landscape effectively. 1. Microsoft's withdrawal from the Stargate Initiative. Microsoft's decision to withdraw from the $100 million Stargate Initiative marks a critical moment in the artificial intelligence landscape. This move is based on the assertion of inflated demand projections for AI capabilities, suggesting that the company anticipates a potential oversupply of AI infrastructure. This withdrawal not only reflects a strategic recalibration by Microsoft but also raises questions about the future viability of the Stargate project, which aimed to establish a substantial AI infrastructure in partnership with OpenAI, Oracle, and SoftBank. The implications of such a retreat can lead to shifts in investment strategies and operational focuses among major tech players. 2. Changing dynamics between Microsoft and OpenAI. The change in partnership status between Microsoft and OpenAI, wherein Microsoft loses its designation as the exclusive cloud provider and transitions to having a right of first refusal for additional computing capacity, signifies a notable shift in their relationship. This alteration highlights a broader trend of tech companies diversifying partnerships amidst increasing competition in the AI sector. Microsoft's historical role as the primary cloud partner since its $1 billion investment in 2019 is now challenged, indicating a potential reconfiguration of power dynamics in the AI infrastructure supply chain. 3. Emerging role of SoftBank. SoftBank's increasing financial ties with OpenAI, where it is poised to contribute up to $30 billion to the Stargate project, underscores a strategic pivot within OpenAI towards diversifying its funding sources. The potential for SoftBank to cover a significant portion of OpenAI's computing needs by 2030 reflects the shifting landscape of AI investments and partnerships, as OpenAI reduces its reliance on Microsoft. The entry of SoftBank as a key financial player could redefine competitive strategies and resource allocations within the tech ecosystem, giving rise to new partnerships and funding models. For infrastructure developments by Oracle, the ongoing construction of data centers by Oracle for the Stargate project, despite Microsoft's withdrawal, suggests that other players are stepping up to fill the void in AI infrastructure investment. This development indicates a commitment to supporting the anticipated demand for AI services, highlighting the critical role of infrastructure in the AI ecosystem. The success of the Stargate project may rely on Oracle's ability to deliver these infrastructures, and its collaboration with OpenAI and SoftBank could lead to innovative solutions and advancements in AI capabilities. The implications for future infrastructure investments are significant, as they will influence the competitiveness of various tech companies and their ability to meet evolving AI demands. 1. The collapse of the dot-com bubble 2000. The late 1990s saw an explosive growth in internet-based companies, leading to inflated stock valuations and unrealistic demand projections. Investors poured billions into tech startups with little to no revenue, believing the internet would revolutionize business. However, by 2000 the bubble burst and many companies went bankrupt, including notable names like Pets.com and Webvan. This event led to a re-evaluation of the tech sector, similar to Microsoft's reassessment of demand projections for AI capabilities. 2. The Enron scandal 2001. Enron, once a giant in the energy sector, was found to have engaged in widespread accounting fraud to inflate its financial statements and stock price. The company projected unrealistic demand for its trading capabilities and hid debt through complex financial structures. When the truth emerged, Enron declared bankruptcy, leading to significant changes in regulatory frameworks. This resonates with the current scenario, where Microsoft has withdrawn from a project due to inflated demand projections, mirroring the need for transparency and realistic assessments. 3. The housing market collapse 2008. The U.S. housing market experienced a boom fueled by subprime mortgages and speculative investments, leading to inflated property values and unrealistic demand for housing. When the bubble burst, it triggered a financial crisis, leading to widespread foreclosures and economic downturn. The parallels can be drawn to Microsoft's withdrawal from the Stargate Initiative, as both scenarios involve recognizing overblown expectations and the potential oversupply in a burgeoning sector. The consequences of the housing collapse also reflect the necessity for companies to reassess their strategies in light of market realities. Future outlook: predictions following Microsoft's withdrawal from the Stargate Initiative. The recent decision by Microsoft to withdraw from the $100 million Stargate Initiative, an ambitious project aimed at bolstering AI infrastructure in collaboration with OpenAI, Oracle, and SoftBank, marks a pivotal moment in the tech industry, particularly in the realm of artificial intelligence. This withdrawal, driven by concerns over inflated demand projections for AI capabilities, could have far-reaching implications for the future of AI investments, infrastructure development, and intercompany partnerships. 1. Shift in AI infrastructure dynamics. With Microsoft stepping back, there will likely be a shift in the landscape of AI infrastructure investment. As SoftBank increases its financial involvement in OpenAI, potentially investing up to $30 billion, this could lead to a more diversified funding environment. Other tech companies may follow suit, seeking to establish their own partnerships and investment initiatives to capitalize on the AI boom. This shift could result in less reliance on a few dominant players and promote a more competitive market for AI infrastructure. 2. Emergence of new partnerships. Microsoft's withdrawal from Stargate highlights the importance of adaptable partnerships in the tech industry. OpenAI's growing ties with SoftBank suggest a trend toward strategic diversification away from singular partnerships. We can expect more tech companies to explore collaborations with multiple partners to reduce dependency on a single provider. Such trends could lead to the emergence of new alliances among firms that traditionally compete with one another, fostering innovation and accelerating AI advancements. 3. Re-evaluation of AI demand projections. The concerns raised by Microsoft regarding inflated demand projections for AI capabilities will likely instigate a broader re-evaluation of market forecasts across the tech industry. As companies reassess their growth expectations, we may see a more cautious approach to AI investment with an emphasis on sustainable growth over rapid expansion. This could lead to a recalibration of AI startups and firms prioritizing realistic timelines and achievable milestones. 4. Increased focus on data center and infrastructure investments. As Oracle continues its commitment to building data centers for the Stargate project, there will be a focus on enhancing AI infrastructure capabilities. Companies may prioritize investments in robust data centers capable of supporting advanced AI applications. The need for efficient and scalable infrastructure will drive innovation in cloud computing technologies, including edge computing and hybrid cloud solutions, as firms strive to meet the growing needs of AI workloads. 5. Potential market consolidation. The evolving dynamics between AI players may lead to a consolidation trend in the market. With smaller AI startups struggling to secure investment amidst changing demand projections, we could see larger companies acquiring promising technologies and teams to bolster their capabilities. This consolidation could streamline operations and enhance competitive advantages for larger firms while potentially stifling innovation from smaller players. 6. Regulatory scrutiny and ethical considerations. As AI technology continues to advance, regulatory scrutiny will likely intensify. The implications of AI applications in various sectors, including finance, healthcare, and transportation, will necessitate increased oversight to ensure ethical practices and protect consumer interests. Companies will need to proactively address these concerns, integrating ethical considerations into their AI development strategies. This could lead to the establishment of industry-wide standards and best practices. 7. Increased revenue projections for AI firms. Despite the shifting dynamics, the overall growth trajectory for AI firms like OpenAI remains promising. Predictions for a significant revenue increase, from $3.7 billion in 2024 to potentially over $12.5 billion in 2025, indicate robust market demand for AI technologies. As the user base for AI applications continues to grow, firms may find new monetization avenues, further driving investments and innovation in AI. 8. Technological advancements and new AI applications. With SoftBank's investment and other players entering the AI arena, we can anticipate accelerated technological advancements. Innovations in machine learning, natural language processing, and automation could lead to the development of novel AI applications across various industries. This could enhance productivity, optimize operations, and create entirely new markets, ultimately benefiting end users. Conclusion. The withdrawal of Microsoft from the Stargate Initiative signals a transformative period in the AI landscape. As companies like OpenAI adapt to new funding sources and partnerships, the industry may experience a wave of innovation and competition. However, this evolution will also come with challenges, including regulatory scrutiny and the need for realistic demand projections. The future of AI investments will likely be characterized by diversification, strategic collaborations, and a focus on sustainable growth, setting the stage for a dynamic and rapidly evolving technological landscape.